The hearing of the Subcommittee on General Farm Commodities and Risk Management entitled Reviewing the State of the Farm Economy will come to order. Good morning, and thank you for joining us as we look into this critical aspect of our economy. Every one of us seated up here has heard from farmers in our districts about the bad farm economy. Commodity prices are low, input costs are rising, and financial pressure is mounting on farmers across this country. While we hear so much about the booming state of the overall economy, our rural and farm economy continues to struggle. You cannot have a successful national economy when such a vital component hurts the way our farmers are currently. The numbers paint a rough picture. USDA forecasts net farm income level for 2019 to be only 77% of the annual average for 2000 through 2017. It's down 50% from 2013 alone. Inflation-adjusted farm debt is the highest it has been since 1980, and the debt-to-asset ratio for farmers is rising steadily. This hearing offers a glimpse into how the economy has affected 4 particular farms in different parts of the country. These are 4 stories about what the downturn in the farm economy means to them. The 2018 Farm Bill provided certainty for farmers by reauthorizing commodity programs and continuing crop insurance. The farm economy is better off because the Farm Bill passed, but is that enough to fix the downturn in the agricultural economy? In agriculture policy circles, we're always hearing about the 1980s. Is the farm economy just as bad as the 1980s? That's what we are here to find out. We should not stand down just because economic indicators today don't look exactly like the run-up to the 1980s. We are here to consider what can still be done to help struggling farmers and truly make this an economy that works for everyone. Thank you to all of our witnesses today for sharing your perspectives, and I look forward to your testimony. I recognize Ranking Member Thompson for his opening statement.
Chairman, thank you very much, and thank you for holding this an important hearing to highlight the state of the farm economy. Doesn't seem like all that long ago we were in the midst of the Great Recession, but the agriculture economy was booming then. Unfortunately, as those involved in agriculture know all too well, markets are cyclical and Mother Nature is unpredictable. Now the rest of the economy is booming, but for our farmers, prices have fallen lower and have stayed there longer than anyone could have predicted. To add insult to injury, over the past couple of years, almost every region of the country has seen its share of widespread devastation from natural resources, including hurricanes, floods, fires, droughts, and even volcanic eruptions, just to name a few. It was against this backdrop and in the face of the extraordinary budget challenges that we wrote the 2018 Farm Bill. One of those challenges came in the form of our friends in the United States Senate, who proposed to spend $700 million less on farm safety net than proposed by the House. And I was proud of the work House Republicans did to finalize a conference report that not only protected the farm safety net, but actually made improvements to farm policy. Now, despite these successes, the current recession in the agriculture economy is a sobering reminder that farm policy, while incredibly helpful, does not make our farmers and ranchers whole. And talking to many folks in my district, there are a lot of farmers who are either already getting out of the business or one bad crop away from being forced to call it quits. Now, while there are many factors plaguing our producers that are well outside of Congress's control, there are some things that we could do now that might provide a modicum of relief. For example, our friends in the Southeast who were impacted by hurricanes or other disasters in 2018, including one of our witnesses here today, anxiously await a sign that assistance might be on the horizon. Congress needs to quickly act to reach a compromise to help address the devastating losses so many experienced last year. Also, this Congress needs to ratify USMCA, the United States-Mexico-Canada Trade Agreement, which would provide some certainty for our farmers that our neighbors to the north and south will remain the 2 largest customers of our agricultural products. It's now up to Speaker Pelosi to allow that ratification to move forward. And time is of the essence. And finally, I want to say a sincere thanks to the witnesses who are here today. I know this is a busy time back home for all of you, but it is invaluable for members of this subcommittee to be able to hear your perspectives as we consider policies that directly impact you, your farm, and your families. Mr. Chairman, I very much look forward to working with you this Congress as we use this subcommittee to highlight the issues that are of vital importance to farmers and ranchers across the country. And thank you again for convening this hearing, and I yield back.
Thank you. The chair would request that other members submit their opening statements for the record so the witnesses may begin their testimony and to ensure that there is ample time for questions. I would like to welcome our witnesses. Thank you for being here today. At this time, I will introduce our first witness, Mr. Matt Huey, owner of Huey Farms in Beeville, Texas. Mr. Matt Huey is the owner of Huey Farms in Beeville, Texas, and is my constituent from the 34th District of Texas. Mr. Huey farms cotton, corn, and sorghum and raises livestock. He has a degree in agricultural development from Texas A&M University and currently serves as the president of the Southwest Council of Agribusiness. Mr. Huey is also an active member of the South Texas Cotton and Grain Association. Thank you for making time to testify about this very important topic. I would now like to recognize Ms. Craig for an introduction of our second witness.
Thank you, Mr. Chairman. I'd like to introduce to everyone Mike Peterson, a farmer from my district in Northfield, Minnesota. Mike farms about 800 acres of corn and soybeans with his wife, Kay, and his two sons, Blake and Shane. They also finish 1,200 hogs a year. In addition to their farming operations, the Petersons also have a welding and fabrication business and a golf driving range on their farm. Each year, Mike and his family play host to the Dakota Rice, Corn, and Soybean Growers Annual Plot Tour, giving area farmers a chance to learn more about new corn hybrids and soybean varieties. He's helping his son Shane start out his own operation with a focus on growing corn and soybeans at the highest levels of environmental stewardship. Mike is a proud fourth-generation farmer and has previously been recognized as the Rice County Farm Family of the Year. Mike is an alum of Randolph FFA, is a past president of Rice County Farmers Union, and is a member of Minnesota Corn Growers. Mike, thank you so much for being here.
Now I'd like to recognize Mr. Carvajal for an introduction of our third witness.
Thank you, Mr. Chairman. It is my pleasure to introduce Dan Sutton. Dan is the general manager of Pismo Oceano Vegetable Exchange, POVE, located in Oceano, California. He is my constituent from my California district, the 24th Congressional District. Dan has worked for POVE for the past 18 years. As general manager, Mr. Sutton oversees the day-to-day operations of POVE, including sales, marketing, accounting, operations, and food safety. Currently, he is the board member and past president of the San Luis Obispo County Farm Bureau. He has currently been selected as chairman of the California Leafy Greens Marketing Agreement Advisory Board. As you can see from his past and current experience, Mr. Sutton has played an extraordinary role in our local economy by working to represent our Central Coast growers and producers. I am glad to welcome Dan to Washington, D.C. Welcome, Dan.
I now recognize Mr. Austin Scott for an introduction of our fourth and final witness.
Thank you, Mr. Chairman. It's my honor to introduce a friend and farmer from my district, Mr. Bart Davis. He grew up in Doe Run, Georgia, in Colquitt County, home of the Sunbelt Ag Expo, North America's premier farm show. He attended high school in Worth County. When he was 18, he and his sister Vicki lost their mother and father. They decided to stay in the family home, and while Vicki took care of the house, Bart took over the 500-acre farming operation that produced cotton, peanuts, wheat, soybeans, hogs, and beef cattle. Today, still in Doe Run, they farm over 5,000 acres, approximately 3,100 acres of cotton, 1,600 acres of peanuts, 300 acres of corn, along with hay and cattle. Bart has the pleasure of working alongside his family daily. The family farm today consists of Bart and his wife Paula, their sons Trey and Jed, and their daughter Lakin. Bart is part owner in Doe Run Peanut Buying Point. He has served on the Georgia Cotton Commission Board of Directors, serving as chairman since 2017. He is a director of the Southern Cotton Growers, and he also serves on the county committee for the Local Farm Services Agency office in Moultrie, Georgia. He has a tremendous amount of knowledge about agriculture, and I look forward to his testimony.
Thank you all for introducing our witnesses. Before we begin testimony, I'd like to thank the chairman of our full committee, Mr. Peterson, for being with us today. Each witness will have 5 minutes. When 1 minute is left, the green light will turn yellow as a signal for you to start wrapping up your testimony. Mr. Huey, please begin when you are ready.
Chairman Vela, Ranking Member Thompson, members of this subcommittee, thank you for this opportunity to be here. As Mr. Vela so aptly said, I'm a farmer and rancher, and together with my wife Shambrin and our 3 children, we live near Beeville, Texas, and farm and ranch in 5 counties of the Coastal Bend. I'm honored to be Mr. Vela's guest. He so ably represents the 34th District where I live, and appreciate him being the chairman of this subcommittee. I'm honored and humbled to be in this room and with you as the ag leaders following such great traditions. And I know what ag policy does, and I appreciate the opportunity to be here. Along those lines, I'd be remiss if I didn't recognize the extraordinary leadership of Chairman Peterson, who I've known a long time and appreciate everything that he has done and continues to do for agriculture, and also Mr. Conaway, and the work they did in completing the 2018 Farm Bill, which serves as the groundwork for policy and production agriculture. Mr. Chairman, this hearing is timed so well because of all the things that you talked about in your opening. I've got written testimony that's long and drawn out. I'm going to try to shorten that to 3 things here to be quick. One is the farm economy in the Coastal Bend of Texas is lousy. It is bad. 2018 was not a good production year. That was compounded by the fact that despite a great MFP program by the administration, it only paid on production. So if you didn't have production, it did not pay. I'm hopeful that that can be addressed here. 2018 follows tariff issues from trade disputes, which drove the price of crop insurance down and therefore erodes the safety net as we work toward what our ability is to borrow and other things. For 2019, we look here at likely negative cash flows again, unless we make an extraordinarily large crop, because we don't have a price market where we can get that done, and we've got enormous exposure based on the value dropping in crop insurance. Despite crop insurance being a great tool, when you have a systemic decline in price, we have a systemic decline in what we're able to insure. The stakes have never been higher than they are right now. I didn't live through the 80s. I did, but I was a very young man. I did live through the 90s. That was when I started farming. It was miserable, but I was so young I didn't know better. And my wife and I, she worked in town as a banker, and we managed to sneak by those first few years starting in 1998 and making it through 2002. 2002, we barely got by. We had to move banks. We had to do a lot of different things. As part of the reason I'm here today, I understand how important farm policy is, and I appreciate Washington stepping in those times and helping us, because that's how we survived. Historically, when we've seen moves like we have now, where you have a decline in price, you also have a decline, although slower, in input costs. That has not been the case in this current environment. Input costs have continued to rise. The rest of the economy is doing well. So as our input costs have risen due to tariffs, due to industry consolidation, due to all other things in the economy booming, we're still trying to sell stuff for the same price we sold stuff for 30 or 40 years ago. None of our input costs reflect that. Third, I want to be clear that I think additional action will be required from this committee, from this Congress, and from this administration. I think if the tariff war, trade war ends tomorrow, this dispute will not be resolved. These prices, the bins are full, the warehouses are full. There's not a system in place to move that stuff out. We've got a world glut of grain. Everything about history would tell us that this will not be resolved tomorrow. There are things that are on the table right now in terms of disaster talk about making some corrections to MFP. That language exists here in the committee. We're hopeful that that can move forward. And I think we need to be talking loudly about another MFP-type program, whether it's done through the administration or through this committee. But there are some things about that program that need to be made more equitable as we move forward. Mr. Chairman, again, the farm economy is complex. Trade policy, labor, ultimately this comes down to farm profitability. And that is where this committee has excelled in the past. I appreciate the opportunity to be here, and I appreciate the opportunity to visit with you about this. Thank you.
Thank you, Chairman Vella. Ranking Member Thompson and members of the subcommittee, thank you for the opportunity to testify here today. The last 5 years have been incredibly challenging on our farm and on farms across the country. In 2018, median net farm income in Minnesota was at its lowest level in the past 23 years. In southern Minnesota, we're entering our 6th consecutive year of growing corn at or below the cost of production. Strong soybean yields and fair prices had kept many farmers profitable until the trade disputes with China took its toll on the markets last year. Now our problem with oversupply is only getting worse. With the continuing slump in commodity prices, financial stress continues to grow. Farm debt's at an all-time high, and most farmers I know have burnt through their equity that they built up in the good years leading up to 2014. We're now seeing a big increase in the number of Chapter 12 bankruptcies in Minnesota. Unless we get our markets back and the prices rebound, I feel many more farmers will be forced out of business. In addition to our current challenges with low prices, market consolidation, and the increase of monopolies on the supply side has caused input costs to rise dramatically. The cost of seed corn, soybean seed, and fertilizer, even when adjusted for inflation, have each doubled since I started farming full-time in 1996. Well, we're more productive now than we've ever been. The increased input costs has outpaced the gains we've made in productivity. On our farm, we've adopted methods to cut our input costs, the usage to levels that puts us on par with the most efficient operations. We plant cover crops, use no-till and zone tillage practices, which reduce weed pressure and cut down chemical costs and usage. We pair that with precision fertilizer application, which helps further reduce fertilizer costs and cut down on fuel usage. We also don't grow late-season hybrids to keep our drying costs low on our corn hybrids, Altogether, these practices reduce our carbon footprint and put us in a better position to survive in this tough farm economy. However, we simply don't have the cash flow we need to install practices that will further improve our productivity, efficiency, and stewardship. The reality is, despite all we've done to adjust to tight margins and low prices, there's just no way to be profitable with the market scenarios facing the American farmer today. I'm currently enrolled in a farm business management course at South Central College. Our advisor provides us data and management assistance so we can find the best economic scenarios. Even with his guidance and expertise, we're faced with an economic scenario that's hard to present to a lender. Like most farmers, I'd prefer a fair price in the market. But during periods of low prices, I'm grateful that we have a farm safety net to fall back on. For the last 5 years, I've been enrolled in the Ark County program, which at least offsets some of our losses. I'm not only at the mercy of the markets, but I'm at the mercy of the weather. The federal crop insurance program is critical in helping me manage risk on our operation. Last year, a tornado and strong straight-line winds came through and knocked down about 85% of our corn crop. Without crop insurance indemnity, that loss would have been devastating to our operation. As farmers, we can handle a slump in commodity prices and volatile weather, but we can't prepare for the situation that was brought on by our trade disputes last year. I'll be the first to admit that I originally supported the effort to secure better trade agreements and to hold bad actors accountable, but the approach to these trade disputes has caused damage that I'm afraid will take us decades to overcome. The market facilitation payments helped last year, but I feel if policymakers are going to continue to affect our markets, we may need to look at some sort of supply management. We've just started our spring planting without any assurance that we're going to have an opportunity to lock in a feasible price for our production. If our markets don't come back and we don't have any additional support, we'd be better off not producing. The bottom line is there's no way to make a profit if we don't have markets for our product. I want to close by saying that I have a 23-year-old son who's purchasing his own 80-acre farm a few acres from ours. I'm doing everything I can to prepare him for the challenges I've discussed here today, but it's hard to be optimistic about the future. Rural America embodies the character and skill sets that have always made America the greatest country in the world to live in. I want my son to have the reason to apply his energy and skills into the family farming tradition. If we want the next generation to get into farming, we have to at least give them a fighting chance. If it's not his generation, maybe we can all try to tell ourselves, or you can tell me who we think will be running these farms next. Thank you again for the opportunity to testify, and I look forward to your questions. I really appreciate it.
Thank you, Mr. Sutton.
I'd like to start by thanking Chairman Vela, Ranking Member Thompson, and members of the subcommittee for having this hearing today. I'd also like to thank my congressman, Congressman Carbajal, for representing our district and our industry of specialty crops in Congress. Our business is a cooperative located on the central coast of California. We are comprised of 5 family farms that collectively market our products through the co-op. We've been in existence since the early 1920s, and we currently have our 4th generation of growers coming back into the co-op. Much like the others that have testified before me, there are significant management decisions that we have to make and things that we have to manage day to day to keep our cooperative continuing for the next generation. To give you a little bit about what we grow Napa cabbage, bok choy, baby bok choy, leafy greens comprising of iceberg lettuce, romaine, green leaf, endive, escarole, red cabbage, and green cabbage. Our crops are very timely. We need to harvest our crops and get them out to market, usually within 3 to 5 days of harvest, as they're perishable. 75% of the nation's leafy greens comes from the central coast of California, which is also known as the Salad Bowl. There are 3 major things that I'd like to talk today that make our production on the Central Coast challenging. The first is water. We have 2 main water systems in California. There's the state water system and private wells. Our farms are on private wells, but in order to get that water from our aquifers to our crops, it takes electricity to do that. The electricity costs over the years have increased the cost of our water to get to our crops. For those in our state that use the California water system, they have seen allocations reduced, and our infrastructure for storing water in California is outdated. The second is labor. We are very dependent on labor in our industry. And as you all know, immigration reform is something that is extremely important to agriculture and something that we are watching very closely. A lot of people say, how come you just don't raise wages? Well, we have. Our employees are currently earning anywhere from $14 to $16 an hour on the farm. And much like the prices we're getting today are not that much different from the prices we were getting back in the early 90s. And labor continues to increase, the labor shortage continues to increase, and yet we're still unable to get employees to work on our farms. We are needing to utilize the only option available to us, and that's the H-2A program. The H-2A program is very costly, but it is an opportunity for us to get the labor we need to get our crops to market. The other thing I'd like to discuss really quick is in our industry, we are very concerned about food safety. As you may be aware, last November in 2018, the romaine industry was shut down. And there was not romaine on the shelves. I doubt that you found romaine here. And we were impacted by that, and that we had romaine in the ground, but we could not get it to market because of the advisory. All of us in the specialty crop production in California take food safety very seriously. It's something that we have to do day to day. It's an investment we make in our crops. Through programs like the California Leafy Greens Marketing Agreement, we are placing upon leafy greens growers in California some of the most vigorous and strict food safety rules that we have to comply with the production of our crops. I have a rule in our house that if I grow it on the farm, my wife is not allowed to buy the same products in the store. Now, she understands that rule, but I get in trouble a lot because I forget to bring it home. But the point I want to make here is that the products we grow, I feed to my family. I feed to my 3 young children. The products we grow go to your families. They go to our consumers and the people in the nation. And food safety will be something that we continue to address moving forward. I'd like to thank the committee again for having this hearing. The issues facing agriculture, not only in California but across the nation, are significant, and the fact that you're here allowing us to speak today is very much appreciated, and I'm grateful for this opportunity. Thank you.
Thank you, Mr. Sutton. Mr. Davis.
Good morning, Chairman Vela, Ranking Member Thompson, and members of the subcommittee. Thank you for the opportunity to provide a perspective on the current economic condition for farmers in Southwest Georgia. I believe this situation reflects what crop producers across the Southeast are currently experiencing. Our family farm raises cotton, peanuts, corn, along with hay and beef cattle in Durham, Georgia. South Georgia is one of the leading regions for both cotton and peanut production. The price outlook for these commodities is bleak, and the economic climate in agriculture makes it difficult for crop producers to remain viable. This economic situation is the result of multiple factors that have combined to create almost a perfect storm for farmers in most parts of the country. First, commodity prices have generally been flat to trending downward due to the global supply-demand situation, trade policy uncertainties, and strong crop yields and large production in other countries. Second, most major crop producer regions in the U.S. have been hit with severe natural disasters in the past 2 years. Hurricanes in the Southeast, drought in the Southwest, and flooding in the Midwest. Third, the trade uncertainty and export market disruptions caused by tariffs are harming exports, which are critically important for most commodities. Last year's hurricane caused $600 million in cotton and seed cotton losses in Georgia alone, plus $74 million in indirect losses. Across the Southeast region, estimates range between $700 and $850 million in cotton and cottonseed losses. While some of last year's crop were salvaged, production was down 40% statewide, and many fields suffered a complete loss. Since the hurricane struck the Southeast last fall, my fellow producers and I, along with our lenders, thought federal assistance would be made available to help offset this historical loss we experienced. Beyond traditional lenders, most of our seed, chemical, fertilizer, and equipment dealers have also extended credit where repayment could be dependent on getting a disaster bill passed. We never anticipated that 7 months post-hurricanes, we would still be left waiting and wondering what will happen. I'm very grateful for the House passing disaster assistance. I want to recognize the leadership and support on this issue by Representative Austin Scott, Davis Scott, Rick Allen on this committee, and Chairman Bishop on the Agricultural Appropriations Subcommittee. On behalf of my fellow producers, our families, and the rural communities across the Southeast where agriculture is the backbone of the local economies, I implore Congress and administration to resolve the remaining differences to ensure a disaster bill is passed this month. The 2018 Farm Bill provides a strong foundation for farm safety net, but these policies are not equipped to adequately respond to the losses when catastrophic natural disasters hit. Coupled with the lost exports due to ongoing trade disputes, it is clear that supplemental assistance is needed across the agricultural sector for producers to withstand the economic pressures we are facing. The China trade dispute with tariffs on cotton are increasingly harming our industry. U.S. cotton market share in China is down 75%, while Brazil has quadrupled its market share. Farmers cannot continue to withstand the economic impact of the trade dispute on our bottom line. The MFP provided by the administration last year has helped partially offset our market losses. Those of us that suffered crop losses due to last year's natural disasters were unable to fully benefit from the MFP. For prospects for increased production this year, U.S. cotton must have increased access and market share in China. The cotton industry also strongly supports approval of the U.S.-Mexico-Canada Agreement. I believe it is critical for the House Agriculture Committee and Congress to take action by providing the much-needed assistance that will help producers withstand the economic downturn occurring in our sector. Thank you for supporting U.S. agriculture, and I would be pleased to respond to any questions.
Thank all of you for your testimony. Members will be recognized for questioning in the order of seniority for members who were here at the start of the hearing. After that, members will be recognized in order of arrival. I recognize myself for 5 minutes. Mr. Davis, thank you for your testimony regarding the disaster relief. I'm hopeful that our next hearing in June will be focused on that issue, and we'll do a much deeper dive into it. I'm hopeful that by then we'll have the disaster relief that we so sorely need in Florida, Georgia, and along the Missouri-Mississippi River. Most of us on this subcommittee represent pretty large swaths of land, and I can't go to any farmer in the 270-mile stretch of South Texas that I represent without hearing about how difficult it is for farmers to get loans and financing and things like that. What I'd like to hear from each of you is, given the geographic diversity that is represented here today, what you are seeing and what your fellow farmers are seeing on that front. Mr. Huey.
Thank you, Mr. Chairman. As you said, credit is a challenge right now. A couple of fundamental reasons that that's a problem relate directly to the market. The first is that most credit in our area is calculated based on your historical production times a given price, and that's what the beginnings of loans are built out of, and as those prices decrease, so does your ability to finance up to that level. Secondly, as crop insurance values decrease and the ability to collateralize crop insurance therefore decreases, that changes your ability to borrow. And so both of those have put a squeeze on. And the third, which is the one I guess I didn't anticipate individually, is that as my fellow growers, I'm grateful that thus far my lender has been supportive, although we've had to refinance some things. I've got some fellow peers who have not been as fortunate as I have, and in scenarios where they owe money that's unsecured, for example, I picked cotton for a neighbor last year who could not afford his own $750,000 cotton picker. I moved across the road and picked his cotton with the expectation that he would pay me. He has not been able to get refinanced, and so he owes me about $100,000, and I guess I'm not going to see that again. So there's a third tail to that thing that I did not anticipate. So we've got sort of three different issues there in my mind related to just sort of the total shrink in what's been able to be borrowed from credit. Thank you, Mr. Chairman.
Thank you. Mr. Peterson.
The current lending situation, we bank on a Main Street Bank in Northfield. Happens to be the same one Jesse James tried to get money out of. But anyhow, they've been supportive, and they're a small town lender. As I said, we've been there forever. It's basically on equity of past generations, our diversification in our livelihood, and their ability to believe in us. We can't present them with favorable numbers. We're just, we're trusted friends, I guess, because the numbers aren't working. And in years past, there's been a little bit of a, my wife does a lot of the marketing, and there's been a little bit of a burp in the market or a positive where we could forward contract. We're an older established farm, and we have on-farm storage, so we can bridge into carry in the market and things like that. But as we plant our crop this year, I don't see a lot of positive frontiers in the markets. It's really hard to price a commodity that we're growing, and it's hard to ask this of our trusted lenders. So I guess what I'm trying to say is if we were across the desk, we'd either have to believe in the individual, or we'd have to make the decision from some other means because we just don't have the numbers before us to present positive cash flow.
Well, thank you. And in the interest of time, I'll go ahead and move on to my colleagues. I recognize the gentleman from Pennsylvania, Ranking Member Thompson, for 5 minutes.
Chairman, thank you so much. Thank you to each of you gentlemen for being here, taking times away from your farms and your families. Just I hope you know how incredibly valuable that is to us. We recognize your sacrifice to come here, but giving us your personal experiences is so important. Mr. Davis, good to see you again. Ms. Davis, you mentioned that the need for Congress to pass disaster assistance. I certainly agree with you. It's unfortunate that it has taken this long, but given that what is being considered legislatively is very similar to what Congress passed to address the 2017 losses also caused by hurricanes in the southeast, would there be any changes in how the WHIP program is designed, either legislatively or administratively, that would help the program operate better for producers?
Yes, sir. In 2017, one of our challenges with the WHIP program was the sign-up process was very time-consuming. They had to manually calculate all the math due to software issues. And one thing was when the producer signed up, he could only get 50% of his eligible payment at that time, and he had to wait till the end of the sign-up to get the remaining 50%, and that sort of hurts. And another thing we have asked to increase the coverage from a 70% to a 90% loss, so you would trigger a payment quicker. And a lot of people that had losses in 2017 in my area did not qualify. Even on my farm, we had a loss, but we didn't have it was a shallow loss, and we didn't qualify. And we also asked that would like to just instead of deducting the gross indemnities from your payment, just deduct net indemnities. And what I'm saying there is, on gross indemnities, they consider your insurance premium in there. So that way, a guy would be getting benefit from what he's paid for insurance, if you follow what I'm saying.
Thank you. Thanks for the concrete recommendations. This question is really for anybody in the panel who would like to address it. You know, I know when I visit my producers in my area, crop insurance really is critical. And for the most part, lenders require farmers to carry insurance, and generally it works well in most years. Could each of you briefly comment on your experience with crop insurance? What type of policy you typically carry, and are there any changes or improvements that we can be working with the administration on to better provide risk protection? Mr. Huey?
Yes, sir, and thank you for letting me speak to that. I was also part of the WHIP program after Hurricane Harvey, and the way crop insurance interacted with the WHIP program was not particularly positive. He hit on a couple of those things already. As far as improvements to crop insurance, my recommendation would be to have a discussion about what happened in our area during Harvey was that we had a giant crop in the field, much larger than what our historical production was. And if any portion of that was harvested, then ruled out crop insurance and therefore ruled out the WHIP program. So there was no system in place to get any assistance, as evidenced by the fact that it didn't spend any money. I mean, I think it was appropriated at $2.6 billion and spent $1 billion. All that money still, it didn't go out into the countryside in my part of the world.
I'd like to make a comment on that crop insurance. As you all know, crop insurance on our crops, it's unlike homeowners or car insurance. With crop insurance, the highest coverage we can normally afford to purchase is 80 to 85%. So we're left to incur a significant deductible ourselves before crop insurance coverage triggers to help offset our losses. With the losses from the hurricane last year, crop insurance will not cover the magnitude of losses we experienced, and it does not take into account the crop potential before the storm hits. We're insuring based on historical yields that don't always keep up with the pace with production due to improved practices in farming technology. What I'm saying is we had to work off of APH, which is a 10-year average, and that always not really fair because we're continuously making better and more production as time goes by. And most farmers you can spend whatever you want. You can spend from $15 to $60 an acre. If you insure to the max on irrigated, which is your premium's based on how much revenue you can collect. In other words, the higher the yield you got and the higher the price is set, the more it costs us. So therefore, you have to use good management to decide getting more bang for your buck. You're gonna have a 20% normally risk out there if you collected the full insurance. You can still lose $100 to $200 per acre on irrigated cotton.
Thank you, Mr. Davis. Thank you, Chairman.
I now recognize the gentlewoman from Minnesota, Ms. Craig, for
Thank you.
5 minutes.
Thank you, Mr. Chairman. I'd like to start by submitting for the record a written testimony from the National Association of Wheat Growers, please. First of all, I really want to start my comments by saying that I'm going to focus on the effect of the administration's efforts on trade for most of my questions. To me, it's just undeniable that this administration has continuously used our family farmers as political bargaining chips in a senseless trade war. When I talk to farmers in my district, the notion that this is short-term pain for long-term gain is getting old. As our farmers are planning for the year ahead, the threat of withdrawing from NAFTA continues to loom, and there is still no resolution with China. Just this week, we saw the impact of the administration's trade actions play out in real time. Ahead of negotiations with China, the president, in a tweet, threatened a new round of tariffs on China, going as far as to say that these tariffs are, quote, partially responsible for our great economic results. This tweet sent soybean futures plunging to record lows, all part of a sustained period of market volatility and sharp decline of soybean prices over the last year. Even if the administration reached a deal tomorrow, we may never regain our international market share for U.S. crops. If we don't reach an agreement quickly, stocks will continue to grow and prices will continue to fall. This market volatility is threatening to change the makeup of rural America for years to come. Farmers are resilient and hardworking people who just want a fair shot at a market and a fair price. So with that, I do want to start with you, Mr. Peterson. You mentioned in your testimony that you originally supported the goals of securing better trade agreements to hold China accountable. I, too, supported that. Do you feel our rural communities, places like Northfield and those surrounding Rice County towns and townships, have received the great economic results that the President claims? And how has the administration's trade war impacted your life, Mr. Peterson?
Just to be kind of humorous, the trade war impacted steel, aluminum, and soybeans. Well, we run a welding and fabrication shop that deals in steel and aluminum, and we also grow soybeans, so it really didn't affect me much, right? Anyhow, on a serious note, it all comes down to markets, and you mentioned our community. Our community is pretty diversified and resilient, kind of its own economic engine, but if we go farther out into rural America, there's my concerns. It's about the communities. It's about the farmers that can spend money in those communities. That keeps schools, that keeps the medical industry, that keeps infrastructure, even fire departments and things like that. It keeps up roads and bridges. It's just commerce. And rural communities, smaller towns are so vital to our whole demographic and our ability to keep family farmers on farms and keep our cropland from being owned by corporations, which in turn I feel would turn into foreign investment in farmland and eventually possibly some of the loss of our own food supply, or control of our food supply, excuse me. So to answer your question, you know, and put it into numbers, I'm not going to speculate or guess, but it's when farmers don't have money, they can't spend it in town, and not having the markets that our checkoff dollars and all of our negotiations in the past had negotiated for. We need to get ships tied up to docks in foreign countries. That's just the way it is, and I don't think we can accomplish that by telling our customers how to act.
Thank you. Just want to follow up on one other topic real quick, and that really is climate change. You know, there's a lot of talk here in this town about climate change, and I believe our farmers are really on the front lines of conservation in this country. So what role do you believe farmers can play here in addressing climate change, and what should the Ag Committee do to continue to promote conservation practices?
I believe that on our farm, I want to be proactive. You know, the soil carbon sequestration thing is intriguing to me, and I'm going to further morph our production practices into building healthier soils, primarily from a me-first standpoint. I want to create healthy soil, reduce inputs, and keep the thin layer topsoil we have in place. That's what I feel a lot of farmers can do.